Hello there. The problems in the British capital market could spread to other countries as well. One possible fire accelerator is lending and a special class of structured securities. And the chaos days in Britain do continue. Prime Minister Liz Truss surprisingly fired her Chancellor of the Exchequer Kwasi Kwarteng on Friday, replacing him with former Secretary of State Jeremy Hunt. At the end of September, Kwarteng's tax cut plans triggered violent upheavals on the British bond markets and sent the pound plummeting. After he had already withdrawn a cut in the top tax rate, Truss announced on Friday that she would raise the corporate tax as planned. And this did not reassure investors. The yields on British government bonds rose again. The Bank of England, the BOE, meanwhile seems to actually want to end its emergency purchase program for British bonds. No man is an island. That was said by British poet John Donne. No one is an island. This also applies to national economies. For example, Great Britain, although an island, is likely linked to other financial markets. The bond market turmoil putting pressure on the UK pension system and the housing market could spill over to the rest of the world and, at worst, trigger a new global financial crisis. Risks of contagion are lurking in several corners on the financial system. The banks were at the center of the last major financial crisis. The bankruptcy of the US investment bank Lehman Brothers in September 2008 was a tipping point. The formerly lucrative business with junk mortgages suddenly became a burden due to rising interest rates and increasing defaults. When Lehman Brothers reported losses in the billions and shortly thereafter went bankrupt, investors began to suspect the banks almost overnight. Who had Lehman promissory notes in their portfolios that were no longer worth anything? Who falls next? And things got tight for banks. Customers wanted to withdraw money that they had invested. Cash was needed, but many securities could no longer be sold or could only be sold at high discounts. And some things are reminiscent of that time now. Distressed British pension funds appear to be briefly unable to find buyers for government bonds at the end of September, until the Bank of England stepped in. Hectic sales of various securities have pushed their prices down unusually hard. Rising interest rates and bond yields are putting pressure on the UK property market at the same time. There is growing concern that loans could default. Should there also be a drop in prices on the real estate market, this would put a strain on banks with large real estate portfolios. And Sascha Steffen, finance professor and expert on banks and the shadow banking sector at the Frankfurt School of Finance and Management, believes it doesn't need a spectacular bankruptcy like Lehman to send shockwaves through the financial sector. Big banks take a lot of risks with the expectation that these risks can be placed on a capital market, he says, for example via bonds or structured loans. If prices in the relevant parts of the capital market came under too much pressure, the banks would no longer be able to fully cover the underlying risks, and we've seen that before. The risks then remain at least partially on the books of the banks. The probable consequence is banks will have to hold more equity, act more cautiously, and have less credit. This is how one stone gets the next one rolling, says Steffen, and he means that across national borders. Risks are no longer local. The financial system has changed since 2008. Banks have lost importance, and the shadow banking sector, more neutrally known as non-bank lending, has gained weight. A large part of financial transactions today does not run through state-regulated credit institutions, but through investment companies. Some important ones are based in the UK. The International Monetary Fund, the IMF, sees a key risk in investment funds. Funds play an important role in financing companies, for example. They are usually tradable on each trading day, but their managers cannot necessarily monetize the securities in the portfolios as quickly. That is a warning from Fabio Natalucci, responsible for the IMF's Financial Stability Report, in a blog post. The mismatch between the tradability of a fund and the liquidity of its investment is a risk in phases of increased market stress. If there are so-called fire sales, sudden mass sales, it could happen that investment companies have to sell illiquid securities at discounts. And everyone who holds these assets will then feel the price drop. A downward spiral could be set in motion. If there are tremors in Great Britain, the earth could quickly tremble in other parts of the world. The financial system is so closely intertwined that risks can hardly be separated and quickly cross borders. This is shown by the example of collateralized loan obligations, or so-called CLOs. And that is something a lot of people here on YouTube were also talking about with regard to Brexit. We do live in a globalized world, and everything that happens on the markets, on economy, on financial markets, etc., has effects in a much wider field, not only on the national level. That is why so many countries are working together nowadays. And that is why going alone is such a big mistake. And relying you're going alone on a financial market, and especially in a crisis that is self-inflicted, like a lot of what's going on in the UK at the moment was inflicted by this government. How do you want to go this alone? And there's one thing it shows too few people are talking about at the moment. The reliance of the British economy on the City of London and the financial sector, from the points of income and everything, is a risky game, especially with the planned deregulation that the Truss government recently once again brought up. They want to deregulate a lot to make the City of London more attractive for banks and companies from the rest of the world. But with what's happening right now, with the effects just announcements from this government are having on the financial market, you see how risky this game is. And if they are even more deregulated, they are playing a much riskier game in the long term. And so, do you really want to live in a country that is so relying on risk? I really do understand why people have lost trust in Truss and her whole government, and at the moment we can say in the Conservative Party overall, because when we look at the polls with often a 30 percentage point lead by Labour, there you see where the trust of the people is at the moment. It's not with this government. And if you think about the other plans we already heard that are supposed to come up this year, or latest next year by this government, which I don't see in office next year, but that's a different point. That is really like Russian roulette with people's livelihoods. As you can see, you got a second video today on this channel. I will try to get to my normal schedule now. So that means also that you will see a video at 6 p.m. CET tonight. And on my other channels this week, there will be videos as well. Today was a video on my Germany channel. So if you are interested in some other politics, have a look there as well. The links to all my channels are in the video description, also with the publishing times. Have a look if you're interested in something. I'll see you there. Otherwise, I'll see you later on this channel. I'll be back.